here. I assume you can see me and hear my voice and that you haven't complained yet. So if that's the case, I will dive in here. All right, I'm just going to talk about the market real fast and things that I wanted to cover. And then after that, we can dive into questions because I'm sure there'll be a lot. Obviously, we are doing a lot with tariffs. I should say Trump is. And so that is leading to some complications because of trade wars. And we're now seeing that play out here. And so again, we had a very big, if we're counting from the top, it was about a 7 to 8% red day on Thursday. And then we had about, if we're calculating from the top, about an 8% red day today as well. Again, this dropping this fast is not only not good for our directional bias, but it's also not good for volatility. Spiking, I think it was about 150 to 200% today. I could be wrong, could be a bit more. We'll look at that here in a second. I didn't calculate the exact numbers on that. But anyways, what do we do moving forward? And so obviously we're looking at this from two different perspectives. The first perspective is, let's say we are in positions right now. So that's going to be the right one. If we're in positions right now, we look at what our strike prices are and the time that we have. So if we're looking at this, the S&P 500 just on the Bollinger Band basis, we broke down below it and then we went way past it. Guys, the market is like a rubber band. And when you overextend it, it tends to snap back more times than not. When I say more times than not, like a 95% confidence of that. And again, that's what this range is. It's a 95% confidence range. And so again, I'm not saying we're going to immediately bounce back and start running, but what I am saying is that if we're in positions, the chance of it bouncing back up to at least here before it continues dropping, if it wants to drop further, is very high. And so if you're in positions that are losing and you have a strike price where you're here or you're very close, then it's worth holding on to, which again, you already did because the market's closed now, but it's worth holding on to until Monday or Tuesday to see a quick rebound, have volatility reset just for a brief second so that your losses decrease, then you exit your positions. So if you're currently in trades, I would say if you're in a position, assess where the strike price is. If you're in the money and you're something that can be assigned, you should look out for that and maybe exit then. But again, this is just my personal opinion. If your losses are a bit too big and you want to take some risk off the table, wait for Monday or Tuesday because again, when we look at VIX doesn't just stay here. It doesn't just stay at that level. You can see here last time we spiked here, we had a big green candle here, big green candle here, big green candle. It might still go up, but the initial shock is what makes VIX go up. And then you kind of reset for a brief second, and then you slowly trend up if that is the case, if we're continuing down. But we always have a small pullback, like a rubber band. It snaps and it comes back, and then it'll start trending up. So again, Monday, Tuesday, you'll see this drop. And then again, from there, if we continue dropping in the market, then we'll see this slowly climb up again. But again, there's always typically a snap. Again, that's just my opinion. The market's already closed, so that's probably going to be your best bet is waiting until Monday anyways. Anyways, so that's if you're trying to close out of positions. If you still have decent room and decent time, what you can do is you can just wait it out. So obviously staying within the 30% range of your account, you would still be seeing losses today that are quite large. But if your strike prices are, let's say, here and here, let's say you're doing something like a strangle like I'm doing, then you're still within the levels of it being fine. And so if you can let it play out, like let's say you have 60, 90 days still left, you have plenty of time for maybe even it not coming back in your favor, which it most likely will in 3 months. But even if it doesn't, you give the market at least a week to cool off, and VIX almost always comes down after a period of a week. And so, again, keeping in mind that VIX spikes and it hurts us dramatically. But if we just wait just a week, again, this assumes that you have enough money in your account to withstand that and you weren't over trading. If you're over leveraged, you're going to have to close out positions. But if you weren't, then you're able to hold these through, wait a week, VIX will decline, the market will slowly start to settle, and you'll be good. If you look at the sections here, the amount of time that it stays below this band, you can see each time on average it's about it's about a week and a half. I remember doing the math a while ago. So again, a week and a half in the market then starts to turn around and rebound. So again, a week and a half is kind of where you let the pain settle here for these trades, and then let them come back through, which is why we do the 90 to 120 days out. It gives us plenty of time to to withstand this. Again, still having the immediate open profit and loss, but that's what we're seeing. So that's if you have positions, that would be my go-to. That's what I'm doing, just based on what I've seen in the market. Number two, if you have no positions, you just got into trading, good job. You just got in at the perfect time. VIX being this high, the market being this low, you're able to sell puts at a 10 delta for a very high credit, and you can do that probably way down here. And the chance of it hitting down here is very low because we're probably going to bounce here soon in the next week or so. And so because of that, it bouncing, you literally have the best time to get into the market. So if you have very little money allocated, or you're just new to trading, I would say now is the best time to put on some positions, those being mainly put based. So he's selling a put, a 111, a 112, something like that. Because with VIX being so high, as VIX declines, you'll just immediately profit from that alone, and then you'll have direction also come into your favor. Anyways, crazy stuff. I'm sure we have a lot of questions, but just before we get into the questions, I just want to say, to reiterate here, is that can the market keep dropping? Of course it can. Do I think so? I don't know. We'll see. But I do know that whether it goes down or not, we have the potential of staying in this range for about a week and a half. Once we stay in this range for that long, we're going to slowly start to recover. It's going to bounce. It's just the market cycles. It's how it works. And then we'll come back up. Might suck for some of us for a week, but again, remember long-term vision. Anyways, I would love to help mitigate as much risk as I can while we're in those positions. So please open up your chat or turn on your mic, and I would love to help out any way I can. I'm going to jump straight to Chris because I see he has something in the chat here. Chris says ratio hedges were the only thing that held up for me today. Any intent to add closing the short put after a percentage profit to leave the long only? Yes, that's a part of my update that I'm working on right now is the ability to do all the different connecting trades, which includes being able to close individual legs. So yes, that's a great question, Chris, and I'm glad you had on the hedges. Sweet. Ooh, we got a crowd now. Awesome. I'm glad you guys are here. Hope you heard some stuff. Let's see. Let me make sure. Yeah, we got 14 people. We have Don, Fred, Chris, Dale, Greg, John, Kevin, Mario, Omar, Stan, Trone, Vera, and William. All right, sweet. Is there anything I can help you guys out with? Provide any clarity? Maybe give some guidance if I can. No, just a crazy market. People having to deal with it. Yeah, let's see. Oops, I typed that into the chat. I was supposed to be typing and trading you. So if you can see here, again, the time when VIX spikes, what you tend to see, again, if you haven't looked at this, is you have a strong push, then you have a pullback, and then it slowly starts to hesitate here. And so again, you tend to see that with most things. When you have a very strong green candle like we did today, you tend to see an immediate pullback. So you can even see here, strong green, and they kind of slow down first. And that slow down is where if you're in trades, is going to give you the ability to get out of some trades that are maybe overextending you. As you can see here, big green candle followed by red, huge green candle. It's just a resetting process. Like I mentioned before, I'm not saying the market can't continue to go down because it can. That's why we're not betting on that. We're just saying if you want to get out of some trades because you're over leveraged, wait till Monday or Tuesday. The market will kind of reset, so your losses will come down a little bit. If you're sitting at about a 300, 400% loss per trade, depending on what you're doing, that will probably come down about 100%. Again, 100% from where it was. So if you're at a 300% loss, it'll most likely come down to around 200% loss, which is, it's still a big loss, but it's definitely a way to offset that. And then again, if you have the timeout, we're talking like 30 days plus in your trades, and your strike prices are still outside of your ranges, or I should say outside of where the market is, then give it a week and a half. The market will reset, and then you'll start seeing theta decay take place. If you're new, get into trades now. Be the best time. Anyways, sorry, I was just making note again because I didn't know how many people heard everything. I wanted to quickly recap it, but let's see what questions are there.
Well, at least Bitcoin was up today.
I bet, right? Let me see. I haven't checked that, but no doubt it was. Yeah.
Question, Fred, on trading, like the 111 or 112 currently. Would you recommend the SPY or would you recommend futures? I mean,
It
you don't have to recommend. I mean, what actually is working better right now?
From a working better perspective, they're both going to have the same liquidity, as in like how easy it is to get in and out of trades, and from the aspect of win rate, they're both the same thing. They're both the S&P 500. So regardless of if you do SPY, SPX, ES futures, they're all going to have the same win rate. It all comes down to buying power and can your buying power handle it. So if you want something that has a consistent buying power amount, as in, hey, I need to put up 6,000 for this trade and it will only require 6,000, then you would want to do something like SPY or SPX, a non-future option, because it's going to be consistent. You will have lower returns from a percentage standpoint, but your buying power will be set. You know what it is, so you can kind of protect your account that way. If you're okay with buying power moving on you and maybe adjusting or changing, then you can do a futures option. Just make sure you're within 10 to 30% of your buying power usage, so that if buying power does increase on you, you have the cash to do that. So in that position, how much free capital do you have? I can kind of point you to where you want to go.
Well, I just set up the account at TD Tasty Trade, and I just put 26,000 in to start with.
Perfect.
I can put more, but I just put that in to start with, and I haven't put in a trade yet.
Yeah. Yeah, I mean, well, congrats. Now is the perfect time. Literally so good. When VIX is elevated, obviously that hurts people who are currently in trades because it elevated the prices. But now that those prices are elevated, you're able to sell at that level and collect that large credit. And then when VIX decreases, you get to see that profit. Anyways, but with that standpoint, it's up to you. I would say your two choices are SPY or ES. I would say those would be good options. SPY is going to be about, I would say, I mean, I haven't looked at it exactly, but it's probably around $8,000, 6 to 8,000, for, I believe that's just a 112. Maybe it's a 111. I don't know, somewhere around there, 6 to 8,000 per trade. So you could do one or two of those with your account size and risk adjusted, of course. And so, yeah, so one to two on SPY. Or I would say do one of them on ES. ES will probably cost you about 14,000 or so right now to do one of those trades. And so you can do one of those. Again, it just depends. You'll get a greater return with the futures on your money, but you will have to deal with buying power changing, or you can know your buying power is set with SPY, doing two of those, but you'll have just a slightly smaller return.
Okay.
Yeah.
I think I'd rather have the steady to start out with
Yeah, for sure.
and maybe move into futures at a later time.
Yeah, of course.
Yeah.
Let me
Okay.
actually let me just pop open a tab here. Yeah.
The strangle that you did, what's the width? What are you
So
normally doing on it?
Yeah, great question. I originally entered at it was a 5 delta call and a 10 delta put. That
Okay.
was but that was like, what was it? 2 weeks ago, I think. I don't let me see here. What I want to do is I want to come this way. Okay. Yeah, so it was originally that if I remember my levels, I think my puts are sitting at around the 5,200 level. So if we look at the market here, the 52, yeah, I thought so. I knew I was slightly in the money. Yeah, I'm about the 5,200 level here for my puts. So I am in the money. The reason why I'm holding is because, I still have over 60 days left on my trades. And so I have no problem with that, since it's futures are not cash, I should say, does not have early assignment risk. So I'm not going to be assigned. So basically my risk is pretty flat there. Anyways, where was it going somewhere with this? Where's this?
Hey Austin, do you
Hey,
trade VIX futures at all?
VIX futures? No, I don't. Do you?
No, I'm just thinking like, okay, again, something like this happens, like so, like a hedge or something. I know we do have ratio hedges, but I'm just
Yeah, I mean,
asking.
yeah, you can always I know Don did, I don't know if he still does, but buying VIX calls as a hedge, you can do that for sure.
Don, do you do like VIX future calls like buy?
No, well, I have, but mostly with just VIX itself.
Okay,
Yeah.
thanks.
Yeah. So
And
if
I,
you're
and I,
doing, sorry, go ahead.
oh, well, I was just going to say I cashed those out today when it was up to the VIX was up to 44 and it was pulling back. I figured it was going to go lower, and so I decided to try to cash in, and I did. But then it turned around and went back up. So, uh, but I ended up buying a SPY hedge today out to May 30th, the 420 put. So it's already up 300 or 400 bucks,
Yeah.
but who knows where it's going to go.
Sweet. Yeah, and that's why I always said like it's nice to take, 10 to 20% of the premium that you're getting and putting it into SPY puts because those things are incredible when they crash, as in like they go up like 100, 200, 500%. I've even
Right.
seen some a couple times go up 1,000% in a day. So those are always really fun. If you take, just like, okay, if I'm trading, let's say, a 111 and I'm getting, let's say, $1,000 of credit. Okay, then that means, let's say, whatever I'm comfortable with, maybe $100 to $200 of that profit, and go put it into a put. So find a put that's around $100 to $200, and you buy that put about 30 days out, and you can have a lot of fun with that.
Yeah, I put in 1,500 today on the SPY put.
Let's see. I wanted to look at this here. Open interest. I don't care about right now. All the Zoom stuff's in my way. Okay, change. Um, yeah, so you can see here, this is fun. Um, yeah, these things went up over 300% today. So, let's say you're going about 30 days out and you were looking to purchase something around $100, right? So let's say you received about $1,000 in credit or maybe 500 or whatever, and you wanted, to use 10 to 20% of that credit you received to go buy a put. You can see here at the beginning of the morning, see this changed by $4.45. So that means that this was trading at $1.05 this morning when the market opened. So you would have entered something like that. And now, of course, it's at 550. So that's about a $445 profit. Um, again, when you're able to do that, it helps smoothen the curve. Let's see,
For those type situations, you would just do a manual trade. Is that correct? In other words, you wouldn't use one of the bots. Is that
yeah,
correct?
I mean, it depends on how you want to structure that. Um, I mean, if you're doing it on the bot, what you're going to do is you're just going to have a bot that every 30 days enters a new trade, or maybe every other week, based on the average credit you're receiving. Um, the new update that I'm working on for the Salter will allow you to link two bots together to do stuff like that. But yeah, currently you would either have to set up a separate bot that just runs on a weekly or monthly basis, or you'd have to do it manually. So, um, I want to get to a question from Greg real fast, and then I'll dive into what I wanted to look into here. Greg says, I've been paper trading using the options auto trader. Can I use it live in TradeStation? Yeah, of course. Yeah, we support TradeStation. You just go up to your dashboard and just add your TradeStation. If you have any questions with that, let me know though. Okay. So if we're looking, sorry, go ahead.
That's great. I'm new to it, so I was
Okay.
wondering if that would work or not. One other question:
Yes, sir.
do you have an opening range breakout bot?
It's not something I have right now, but you could do that through our webhooks, which is a bit more advanced, but it can still be done.
Okay,
And so are you familiar with webhooks? Are you okay with me walking through it?
I'm not real familiar with it, but I'm sure.
Okay, I will quickly walk through it here, and if it's too complicated, that's fine. Just let me know. Let me remove all this stuff. So TradingView most likely has an opening range breakout because it's a popular thing. Um, let's find one that is good. Lux Algo tends to be good. Let's see. Okay, yeah, opening range breakout. Okay, so here's the opening range. Again, that it shows us. I assume in the settings we can change what we want the opening range to be. Yeah, time period based on 30 minutes. How do you do the opening range? Do you do it based on the first 30 or the first 15? I know those tend to be the most common.
I do it 10. I started at 10 minutes before the market opens.
Oh, okay.
Maybe 9:20. So far, I had over the last 6 months, I've had about a 92% record on it. So it's worked really well for me.
Nice. Yeah, so you'll do something like this where you're able to add an indicator of some kind that shows the opening range breakouts that you can have a line. And basically, if we look into, I'm looking at here is the style here. Where is it? I'm actually looking for something different. Okay, yeah, so the opening range breakouts, I'm just looking for the individual color. Change that to black. Okay. It changes like that. Okay, so the black line. I was just trying to figure out what line. Anyways, so I come in here to the alert on TradingView. I click on alert. And then I go under the conditions. I go, hey, I want to do the opening range breakout.
On TradeStation or TradingView?
TradeStation.
TradeStation.
Oh, what am I
Okay.
saying? Sorry, TradingView. Yeah, so you set up the alert in TradingView, and then TradingView will signal our system, and then our system will place the trade through your broker. So TradingView, Options Auto Trader, Broker. So anyways, yeah, so we'll go here and we'll go price. We'll say is less than, and then we'll do Lux Algo, and then opening range breakout. I was hoping I could pick a specific thing. And maybe I need to choose a different opening range breakout level. Indicator. Let me see. This is. Okay, yeah, here's the opening range. Oh, cool. Yeah, so it gives me a breakout signal. Dope. I can use that. So use this indicator ORB here. I add an alert, and see if I can use the ORB. And then yeah, here we go. ORB breakout, like that. So when it breaks out, oh, I guess I won't know which breakout it is. See, is there any double cross? Okay, price is less than opening range breakout, and then yeah, we're gonna go opening range breakout low. So if it's less than the low, does this make sense? I know I did a lot of technical stuff and had to figure it out, so I might have confused you, but is this kind of making sense, or should I?
No, it is.
Okay, cool. Yeah, so I find an indicator that allows me to pinpoint the opening range levels for me. And so once I did that, then I clicked on TradingView Alert, and then I set up the condition in which I want this alert to trigger, which is, again, you can change this to any asset you're doing, but for right here, for this example, I have SPX. So it says when SPX, when the price of it is less than, aka below, and this is the ORB low, so the opening range breakout low. So if it's below the low, then I know, okay, I'm probably going to do, what do you do? Do you do a call credit spread?
Just been doing calls or puts on
Okay. Yeah, so then you would come into here to webhook URL, and you would connect it to a bot that buys a put. And so how do you buy that put? Like, is there a specific level or price that you look for?
Not bothering you there. Just
Yeah, so when you're ready to buy a put to take advantage of the breakout, how
I
do you
just
pick a put to buy?
I just set the call or put if it's going down. I actually use Thinkorswim, and I set it to 1 or 2 pennies below the line that it sets.
Okay. Okay, cool. Yeah. So basically wherever the breakout line is, you're buying a put there.
Correct.
Okay, cool. Yeah, so then you can set up a bot that does that. You're basically just setting up a bot that buys a put at the money, essentially. Or I mean, you can change that however you want. But you'll set up a bot that does that. You'll go into the bot and you'll paste the link that it gives you for the webhook URL. And so now when the TradingView alert triggers based on this, aka price being less than this, and again, you'll want to do it probably only once. Um, then you run that. And so once it's below, and then again, you'll set up another alert for when price is greater than the high one. And then you'll set this to only once. And then you'll connect that to the bot here, the link that buys a call. And so just like that, now when TradingView sees that, oh, it went below, then your bot will trigger to buy a put. Or if it goes above, your bot will then trigger to buy a call.
Okay.
Yeah.
It works pretty well.
Yeah, I know a few people. Oops, let me remove this. A few of our members who have these settings on VIX. They use the webhooks for VIX to buy puts on SPY, and I'll show you exactly what they do. It's actually quite interesting because I walked someone through it. Basically, they do price of VIX when it moves up by a certain percentage in a couple bars. So I think what they did is they did it on like the 15-minute chart. And they're like, I forget the exact numbers. I believe it was something like if it goes up 15% in a matter of like 5 bars, then they have the automation trigger to buy up a SPY put. It's actually kind of cool. So yeah, so you can do things like that. Obviously, for that person, I should go check it out and ask them how it went. But I assume today that went well. Yeah, let's see where was the 15% rise? 15%, not there. About here, yeah. So wow, it would have triggered around there. 15% rise in a few minutes right there. Yeah. Then buy the put. Anyways, sorry, off topic. But yes, you can use the webhooks to easily set up various settings however you want it to enter or exit trades. Like, hey, if I want to do based on a trend line, based on the opening range breakout, things like that. And the bot will just give you a link. You take that link and you paste it into TradingView and you have it connected.
Can you send that to Thinkorswim also?
Like buy a put in your Thinkorswim account.
Yeah.
Yeah, of course. So the options auto trader is what's sending the trade to the broker. So as long as you inside the options auto trader connect your Thinkorswim account, then TradingView will trigger the options auto trader, and the options auto trader will trigger Thinkorswim.
Okay.
If you set one up, I would advise you to do a trial on paper
Yeah.
account to make sure it's working right for you.
Okay. Thank you.
You're welcome.
Yeah. Yeah, and once you have the I know because you're kind of new to this, which is fine. But once you have the conditions set, feel free to take a screenshot of it or explain it to us and send it into our support team. Either Patrick will take care of it or I'll see it. And just say, hey, these are the settings, and then explain, hey, this is actually what I'm trying to do, and we can be like, yeah, that matches up, or no, you should probably change it like this, and so we can make sure that it's actually going to do what you want.
Okay.
Yeah. Perfect.
And to get out, to exit it, same.
How do you typically exit it? Like when you're trading yourself?
I usually just have my, I just go in on my stop and have it set it. Normally I'd set it at a 7% and just let it go till it hits 7%.
7% profit.
Correct.
And then do you have a loss limit on that? A stop loss on it?
I've got a 30% loss on it.
Okay. Yeah, for sure. I'll actually walk you through setting this up right now. Just to make it easy. So
You
we'll come
just
in.
set it up in the bot.
What?
You just set it up in the bot.
Yeah, exactly.
Yeah.
Yeah, so this is the options auto trader. Again, you click on your profile image, you click on connect your broker, and you can connect Thinkorswim here. You can connect TradeStation, and do whatever you want. And then again, you'll see what broker you're on by clicking in the top left-hand corner, and you can switch. So like if you want to create the bot in paper first, you can go to your paper account and do that. Um, yeah, so once you're in the here, you're just gonna click on create an auto trader, and we'll create one for that specific thing. So for in this instance, we're gonna do a naked put, right? We're gonna buy a put. And it sounds like is this on SPY or SPX?
SPY.
Okay, SPY. So SPY, I assume it's a 0 DTE
Uh,
or no?
I normally do it on I do it on Monday through Wednesdays on Friday, that Friday, then Wednesday on is the next Friday.
Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, so it's
But
probably
that,
gonna be it's gonna be around 4 for each of them, and then we can set the specific days here in a second. Um, so amount out of the money is going to be at the money, roughly, basically. I mean, you can change this however you want, but it sounds like it's gonna be roughly wherever that breakout zone was is where you want it to be. So SPY, about 4 days out, you're going to buy one contract at the money. Again, if you want to up your contracts, you can, of course. Does this make sense so far?
yeah,
Okay. Next, we're going to go into entry rules. You say Monday, Tuesday, Wednesday. We're going to do multiple times a week. So multiple times a week on Monday, Tuesday, Wednesday. And for the sessions, we are going to ignore these sessions do not matter because we're going to come down here and we're going to enable webhook for this bot. We're going to click enable. And we're going to save our settings. Does this make sense so far? Multiple times, Monday, Tuesday, Wednesday, and then the webhook.
yes,
Then this is where we manage our exits. So like you said, I think you said a 7% take profit and then a 30% stop. Is that correct?
correct.
Cool. So yeah, we'll have a 7% take profit and a 30% stop. Our platform will monitor those based on the real-time prices, and then we'll exit whenever you hit one of these levels. So we continue on that. I actually tell the bot how much to use. Obviously, if you're doing paper, you can do whatever. If you're doing our live account, do what you typically do. Again, I can set 1,000 here, but most likely, we're only doing one contract per trade, so it's probably just going to be whatever the cost of one contract is. Probably, I don't know, 500 to 600, I assume, for an at the money contract. Actually, no, it's 3 to 4 days out. So maybe, yeah, maybe it is closer to 800, 900, something like that. Yeah, and so you would save that. And so this would be the bot. You'd approve it, you set it live. I'll give you the webhook URL, which is this little thing right here, which we can copy. And this will be what we paste into TradingView. But what I want to do in this instance is I'm just going to go back to the dashboard so I can show you what it's like from this perspective. So you can see here I have a SPY 4 DTE naked put. Click on this. If you click on your gear icon, you'll also see under the entry rules, webhook. And so again, I'll click on generate webhook URL, and then I'll just answer some questions. I want to enter the trade, and I want to enter based on the strategy rules that I picked. Preset rules. And just like that, it gives me this link again. I just copy this link, and that's what I put in the alert. So let me go back to SPY here. Add the indicator for the opening range breakout. Opening range breakout by Trade Seekers is what it was. Oh, I have it on a daily time frame. Let me go down to a 1 minute time frame. Okay, just like this. Let me remove all my drawings. Okay, opening range breakout, just like that, based on the first, I need to change the settings. Settings here, based on the first 10 minutes. Opening range time to, oh, they only have 15 minutes, that's sad. Could do pre-market though. And I think it was like pre-market 9:15 to probably like 9:30. I think, right? Something like that. Like you also look at the pre-market time.
Yeah, pre-market, the last 10 or 15 minutes.
Okay, cool. Yeah, perfect. All right, so this would do that. And so yeah, so you have the opening range breakout there. This indicator that's just showing it. Then we'll go to alerts, and we just show it here. So when SPY, we're gonna, it's gonna say that SPY is less than, or we should say cross down, cross down. So that means immediately breaks, crosses down, and the opening range breakout, and we'll do OPR low. So when SPY crosses underneath the opening range breakout line, the low side, we'll do that. And then so that's going to trigger when the alert sends off. And we want the alert to trigger our webhook. So we go in here to notifications. We click on webhook and we paste that link that the bot gave us. And so this is what connects it. So when this alert triggers based on these settings, aka the opening range breakout crossing the bottom side, it will then go to this little link here, and our bot will then know, oh, cool, it's time to place a trade. And then now the bot has all the rules for the trade, which is open a put right where the price is, buy it, buy one contract, close it at 30% stop or a 7% profit. And just like that, it'll all be managed for you.
So where do you find that paste? I've seen where you copied, but where did you go to paste that at?
Yeah, so when I clicked on alert into TradingView, and then
Okay,
I set up the alert here,
in
and
the
then
alert.
those were the settings for the TradingView alert, and then there's notifications here. You click on notifications, and that shows you how. And then there's a webhook URL section right here, which I paste that link into.
Okay,
Yes, sir.
got it.
Awesome. I'm going to cancel this. I don't want that triggering, and I'm going to delete this handy dandy bot. So then trigger. Oh, it takes a sec. I forgot about that. All right, sweet. Yeah, that's that. Let me make sure I am not. I'm sure there's a chat message I'm missing. Let's see. Omar says, will the recording for this and last week's session be available? Did I not release last week's session? Yeah, that's how I thought I was, or trying to. Let's see. 324. Is that right? I think yeah, 324 the last one. Maybe not. Maybe that's too far ago. Yeah, no, the 28th. Okay, yeah, you're right. Okay, yeah, thanks for reminding me, Omar. Yeah, I did not post the one from last week. I do have the recording. I'll make sure to get it out. So yeah, I tried to get them out on Monday. But I'll try this evening actually because I know I'm missing one, so I'll try to at least get the one out from last week out this week. Last week out today. And then today's out on Monday. Sweet. Any other questions? Other chat. Let's see.
Yeah, if you wanted to do something similar to that. Oh, I'm sorry. Go ahead, Greg. You have a question or?
I do, but Fred, go ahead and I'll go after you.
Okay. If you wanted to do something similar to that, let's say SPY trading in a particular range, you wanted to buy it once it hits this range like 520, and you want to sell it at 518, the put. Now, do you have to use webhook or can you just set up a bot for that, a manual bot?
Yeah, currently, if you're trying to trade it based on when it hits a certain level, you would need to do the webhook for
Okay.
that. And so the way that you would do that, are we talking about like a support and resistance that you have on like a 1 minute time frame or more like a daily time frame?
Zero DTE.
Okay, so like more like a 1 minute. Okay. Yeah, so let's say, we have this range here. Let's say it's because of this high and because of this low. And so during the pre-market, we draw out these levels and you're like, okay, I assume a bounce or maybe a breakout or something, right?
Yeah, it doesn't have to be pre-market, just if it reaches that point at any time during the day.
Yeah, so basically you just take whatever trend line you want it to be based off. You click on the trend line and you click on the alert button that pops up. And this now allows you to specify that trend line. So now you can be like, if SPY, which means price, if SPY crosses up, crosses down, greater than, less than, whatever you want it to be of this trend line, then you can trigger that bot.
If it's in that range, buy like the 518 put or whatever you want to buy. Is that correct? Can you specify the
Yeah. So
the
if you're
puts you
trying to,
want it to buy? Okay.
yeah, so if you're trying to stay within a range,
Right.
you would want to use not a line, but you want to use a channel. Where is it?
Channel. Okay.
There's a channel on here. Don't know why I can't find it. Oh, no, that's positions. Hold on, I'll get to it. Parallel channel. So you draw the first line and then you map out the second. So this is what's called a channel. So we're trading inside a channel. And now I'll click on this channel. I'll do the same thing, alert. And just like this, I can say when price is inside the channel, outside the channel, exiting the channel, or entering the channel. So for this instance, you want to be inside, you said. So if it's
Ring the
inside
channel.
yeah. So
Yeah.
when price is inside the channel,
Okay.
then it will execute the trade.
Okay.
Yeah. Yeah, and so webhooks probably won't make up the majority of people's trading. Maybe it will. I could be wrong, but it is very good to trigger off hedges and conditional things like that. Like maybe having things like, hey, I want to buy a call, I want to put credit spread when the market breaks, the Bollinger Band, things like that, whether that be to the bottom side or the upside because the market's getting too extended, triggering more of those one-off things. Also hedges. Again, they can't be used for zero DTE, obviously. But that's typically where I see webhooks being used. Sorry, I think Mario had a question.
Yeah, thanks, Austin. Really simple. Yeah, I had an open trade, and well, actually, it's still open. But what would cause it to go from open to pending trade? Shouldn't
Uh,
it just remain an open?
yeah, so open to pending trade means that we're trying to close that trade. So the trade hits your take profit or your stop loss or something like that. And so now the trade's trying to be closed.
Okay. All right, that was it. Really simple. Thank you.
Yeah, of course.
Yeah, talking about the webhook, I used it on the MACD. So when the MACD crosses above or below the signal line, then it executed a trade. It worked really well.
Nice. We're doing that for downside or upside moves?
Yeah, I was doing both.
Okay. Were you doing that on a 1 minute, like a shorter or a longer term time frame?
I was doing it on a 5 minute.
Okay. Yeah. 5 minute here. And so I just want to give another example for those since checking out webhooks. Underneath alerts, you can see SPY here, price of SPY. We don't really want to do that. We're basing it based on MACD, so we're going to change price to MACD. And again, there's certain rising and falling things that we can do here, which is MACD specific. That's not what we're trying to do. Instead, what we can do is we can do crossing. And so again, the blue line crossing below the orange is going to show downside. The blue line crossing above the orange is going to be an upside move. And so that's what we can do. We can be crossing, let's say we're going to do a downside move, crossing down. And of what value? Well, it's going to be the MACD. Oh, sorry, MACD histogram. We're going to do the MACD signal line. We want that will cross down underneath the MACD line. So like that. And so when the blue crosses below the orange, that would be a downside move, which could trigger, and you would again connect that to like a bot we just created that would like buy a put or something like that. And then you would do, the reverse for if you wanted to buy a call. We'd have the signal line, and you would do cross up of the MACD.
Yep.
Yeah. Just like that. Zero DTE, automated. Let's see. Again, as Don said, always paper traded first to make sure those settings are right. Kevin says, do you have to use TradingView for the webhooks? No, it supports like webhooks are just a link, and so if you hit that link, it'll work with a post request. And so I know that's getting technical, but no, anything that supports webhooks can be done. So you can do it on something like IFTT, I think, or Zapier or whatever. It's just that TradingView is one of the best ones since it has all the indicators built in with it. And any other questions? Awesome. Well, shout out to you guys for those who are in trades and surviving and holding through. You guys are troopers. I'm there with you. Hopefully next Friday we can say some better things. Right now, obviously, when you see this progression, debit trades are typically the move. Again, zero DTE trades are going to be winners at this time. Things like that will be doing well as we're in this kind of transitionary period to finding a bottom and turning around. When you start seeing that turnaround, then you kind of want to start playing some more of those long-term options. But while we're in this middle ground of finding a zone, your zero DTEs and your debit trades are going to do very well, just in case you're looking to play a bit more on the shorter side right now, the shorter time frame side.
I sleep better with ODTE.
I bet you do.
Get
Completely.
rid of that risk before
Yeah,
I go to
really.
bed.
That is, yeah, that's true. That's nice. Yeah. I need to find the time. I need to get time. I've been meaning to back test more zero DTE strategies to find something.
I'm doing really well on XSP.
Yeah, I really want to add that back. I'm trying to find a data provider. Anyways. Yeah. Why do you like it so much?
Well, first of all, it's working about 95%. But I track the first two 15-minute candles, and after the first 15-minute candles, which ended up being about 10 o'clock,
Mhm.
if the on the VIX, and if it's below the first candle, then I place calls.
Okay.
But if it's above the first candle, breaks out above the first candle, then I place puts. It kind of gives me the trend on XSP.
Nice. Okay, yeah, that's cool.
Yeah, works pretty well.
Yeah, I'd love to try that.
Hey, Austin.
Yes,
It's
sir.
Mario. Yeah, can you add that the Bollinger Bands onto the chart you have there, the two with the 200 period?
Yeah.
And yeah, oh, it's out of it, huh?
Oh yeah.
Um, yeah. Hmm. I was just curious, like, at what point will we start doing like the 112 on it? You know, it's like way out of the Bollinger Band there.
Yeah, like if you aren't in many trades or don't have like if you're new to trading, as in like you don't have any open positions, then now is the perfect time to
Hmm.
get in. Obviously, still control risk, be within 10 to 30% of your account if you're doing futures, within
Hmm.
40% if you're doing stocks. But now is the optimal range because your chance of dropping lower is very little, and even if you do, the amount of credit that you're going to receive is going to be higher, and it's going to push you way out here. That means you're going to have a higher win rate if you enter now. You're going to receive more money, and you're going to make money faster because VIX is going to slowly settle and drop, which is going to give you a profit boost. So if you have the capital to get into trades now, it's a great time.
Okay, awesome. Thank you so much.
Yeah, of course.
Okay.
Yes, sir. No, I didn't say anything. Okay. Sweet. Thanks again, guys. Got a nice crowd today. I hope to see you all, or as many as I can, next Friday. Thanks, Don, Fred, Mario, Greg, Inga, John, Kevin, Omar, Stan, and I'm sure other people that jumped off. Hope you learned something. I'll make sure to get this call up on Monday, and have a great weekend.
Thank you, you too.
Thank you.
Okay. Thank you. Yeah.
See you.
Yeah.